Audio morning brief for the U.S. stock market. I'm Rich Passive at Critical Point, 7:52 a.m. Eastern Time, January 8th. At the start of the trade last night, the futures rose a bit off of good news that the government has probably put a deal together to maybe fix the government spending or servicing in January, and then there's another phase of that in February. But the model is saying, you can't trust that kind of news as being any lasting bullish or bearish. And overnight, the market eased back a bit, and we got it off slightly this morning. Some of that may be to a firmness in interest rates, and some of the global markets were a bit soft to start the week. The model is saying there's a good chance January 5th, the market bottomed for a level 4. Intra-week swing, and it can bounce today into tomorrow. So we're going to give at least today a chance for the market to rebound, okay? But keep in mind, it's like the marketplace prefers to do most of its business Tuesday through Thursday. So we won't get everybody back to work till tomorrow. So that can make trade today questionable. Also keep in mind the market's going to prepare for an inflation report that's coming, okay? And the model is currently saying this inflation report shouldn't be all that important to the market. So we're thinking January 5th low, not only a level 4 bottom, but it might be a level 3 bottom, the once a month bottom type, or you could call it a buy signal, I guess. Okay. So we think the very short-term trader may put a little lift into this market this week into next, which means the level 4s are going to have an upward bias more than a downward bias, but they're still going to fluctuate. They're still going to show both directions along the way. In addition, the model is saying that January 5th low, lowest price, could well be a level 2 bottom. Unfortunately, the model is saying that level 2 bottom may show up later this month, that there's 2 opportunities for it, and it will coincide with level 3 bottom. If we've got a level 3 bottom in place and not the level 2, the market should move higher this week, maybe into next, back off for about a week, and it may go lower than this week or last week. If it's a level 2 bottom now with the level 3, then the setback later this month on a level 3 would only be a little bit of a pullback within a larger uptrend into late February, early March. That'll be the level 2 trend. So I'm bullish into late February, March. What I can't tell you is there going to be a setback later this month, and so the overall month doesn't look like it's doing anything or even down. That's a possibility. But for a moment, erring on the side, it's probably bottoming early to mid-month, and it's moving higher. And I think there's a chance it bottomed last week. Now, some evidence to help us with this would be if the cash S&P 500 trades above 4726.78, and also watch for some strength in the NASDAQ, because the NASDAQ, in my opinion, is pushing and shoving around the market. And at times, I think the model's a little more accurate in the NASDAQ right now than the S&P 500. Now, if the S&P 500 cash trades below Friday's low or January 5th low at 4682.11, consider a chance it can go down to about 4670. And I do think there's going to be some type of technical pattern traders who might become concerned if it goes below 4665. Okay. Now, flipping over to the futures, what we want to watch out for is that I think if we can get the market to futures to trade above 47.60 and a quarter, we have an opportunity for the market to swing above 4,800 in just the next few days. If it trades below the January 5th low at 47.02, then we have to be concerned of a little more downside. But if it does it in the next few days, the model will probably just try to throw another dart to find this level 3 and potential level 2 bottom. Okay. If the market's going lower by the end of this week, and more so if it's going lower next week, the model will say, well, there was a level 3 bottom, didn't really work, and the market's going to be soft into the next level 3 bottom ahead of the end of the month, ahead of the Fed Reserve. and then that's going to be the second opportunity for level 2. So we are going to have some time stops when we'll say, okay, this is taking too long to get going, but in the meantime, we're saying there's a good chance this is bottom for level 2. This market's heading higher into February, so keep that in mind. Interest rates, they may move higher today, tomorrow a little bit, but ultimately we think they ought to stall out around by the time of the inflation report and can actually back off some going into the inflation report and afterwards. And we don't think the inflation report is going to be that important. But if we can back off interest rates, it should help our stance that the U.S. stock market ought to move higher. Past results are not necessarily indicative of future results. Have a great day.